Hey yo. Hey yo. Make sure you like, comment, and subscribe to the UAPRadio YouTube channel to catch new podcast shows every week.
Who is he talking to?
Income, assets, and credit. Those are the three pillars to buy a house. What's your income? What's your assets like? And what's your credit, right? Let's talk about income. How much money you make? You decide that, right? Or you kind of decide that because you decide whether or not you want to go to work or not. Or where do you want to work? And all that good stuff. Hourly, salary, self-employed, we do it all. We all sit down, because everybody's situation is different, is you have to sit down and you have to really figure out what's the best situation for everybody, and that's what we all want to look at to make sure that it all makes sense. From the application, then we're going to sit down and we're going to get all warm and fuzzy and cozy, and we're going to talk about that income, that assets, and the credit, right? People say, oh, credit, well, credit. I say credit last because credit does this. It's a roller coaster, right? Sometimes it's high, sometimes it's low, sometimes we don't understand what's doing, and all of this stuff, and so I don't press upon credit. Do you need credit to buy a house? Absolutely. But credit's not something that we're going to drill in your head and all of this stuff, and we're going to let Ms. Joy talk about credit if you need credit concerns and all that stuff. We'll figure that part out later. But income and assets is what's needed, right? Down payment assistance. Is down payment assistance available? Absolutely. We got a grant out here in Kings Mountain, something they do for first-time home buyers. We can talk about that. You have North Carolina housing. You have all types of products that will help you with a down payment. But at the end of the day, and I'm not going to drill you in the head about down payment assistance, but what I will tell you is that you have to have your own nest egg, right? Because when it's time to go shopping for a house, you got something that's called earnest money deposit, right? That's what Ms. Denise will talk to you about. It's something called due diligence if you're not buying a new home. Ms. Denise will talk to you about. You got appraisals and inspections. Down payment assistance ain't paying for that. You got to pay for it yourself, right? So those are the things that you just want to impress upon about home buying. But I will say again, I think home buying is probably the single most important thing that you'll do in life, except for having a baby and having a family and all that good stuff. I got my oldest out here because he had me running around doing basketball stuff, and I said, "You gonna work tonight? So you get in the car and come with me. We ain't getting on no PlayStation yet." So I truly believe that it's an opportunity. You got to be with the right folks for it to happen. Yes, you may hear horror stories and things of that sort, but I think you have horror stories when you don't have a plan. You don't sit down and plan this thing out based off of what can I truly afford. And the good thing, and the last thing I'll say, and then I'll let Joy go, is that everybody will always talk about, well, what can I afford, or what can I buy, or what's this, that, and third. And then the thing that I want to press upon and say, I'm always going to come back and say, well, what's your comfortable payment? Talk to me about comfortable payment, right? Yes, the bigger you buy, the more you make, all that, more money I make, right? We get paid off that. But at the same time I'll never make a mortgage payment for you, right? I can sing Kumbaya, we can do all those type of things, but I want to always make sure that you are comfortable. So I lied, I said last thing. One thing Ms. Denise did say, she said, what's been going on the last 2 years, right? Yes. We had COVID happen. COVID happened and the market, the government pumped a lot of money into the market. So they kept things afloat, right? What's happening now is probably what should have happened probably 2 years ago. Interest rates are on the rise. Does that mean you can't buy a house? No. But what I liken it to is that with rates being on the rise, I would liken it back to 2018. 2018 was still a hell of a year. People were still buying houses, right? Are interest rates in the 2% range? No, they're not. But can they still be in the 3% range? Can you still afford it? Absolutely. So when I first got into business, interest rates were at 7%, 2003. Now they're at in the 3% range. Okay, we're still buying. When my parents bought a house, they tell me the horror stories, they bought one at 18%. We're not there. I pray that we don't ever get back there. But at the same time, again, we all look at our individual situation. I liken it to like a horse rider, right? A jockey. I'll be the jockey and you be the best horse, but we're gonna put our blinders on. And whoever's racing their race to the left or to the right, I'll let them run their race. We're gonna run our own race because we're gonna get to the finish line quicker. So again, I'm gonna push it back to y'all. I'm gonna let them do what they do. But at the same time, just think about your questions. Think about anything that we could talk about, anything that may be pressed upon. We don't have a whole lot of folks here, so we can get real one-on-one with it and just make sure, again, everything starts with the application, but more importantly, you can buy a house. And we're gonna show you how to do that tonight.
Thank you. Thank you so much. Good parents from him. Thank you so much. And we have a gift from Terrence and Atlantic Bay Mortgage. So my great assistant, Miss Gina, is going to select a name from those who registered, and we're going to hand out a gift from Terrence and Atlantic Bay Mortgage.
Awesome.
Yeah. So we do like giving out prizes, so that's a treat today. Miss Gina, who are you gonna select over there?
Thanks to the new, the couple that's gonna get married this year.
Oh!
Miss Angela Stark.
Yeah, awesome! Congratulations! That's good. Isn't that wonderful? I told
So
you.
when you close, I gotta get you another gift. So
Yeah.
congratulations.
Oh, wow, thanks. Awesome.
There we go.
Yeah, that is great. All right, we have Miss Joy Adams, local here from Kingsmount area, is gonna talk about credit. Yes, thank you, Joy.
No problem. Thank you for having me. Good evening, everyone. My apologies, I did have some issues at home with my printer, of course, on nowadays, but I got them printed out. I'll hand you guys one of these. So it's ironic that I'm speaking at a home buyers event because the reason that I got involved with credit repair is because I had given up the possibility of ever owning a home because my credit was janky. I mean, it was horrible. I didn't think it was fixable, so I had accepted in my, I don't know what to call it, but my crazy mind that I would be renting and that would be okay, and that I would go to a buy here, pay here lot, and I had become okay with that. Sad but true. Until I ran across the company that offers these credit repair services, I immediately saw a second chance, of course, jumped on it, and my credit score has increased over 300 points. So that lets you know how I So, you know, with the market today, I'll just tell you guys this. I rent right now. I've been renting for 12 years. So my landlord, she's really like family, really good lady. Perfect landlord. I say about a year ago now, close to a year ago now, she called me and said, it was on a Monday. She said, I'm sorry to tell you this, but I have to put my house on the market tomorrow.
That's real.
Yes. And I had just became a single mother, so I'm already going through that, and now I have this. I'm like, oh my goodness, what do I want to do? But the good thing about it is my credit is okay, so I can buy a home. Now, I am going to relocate. I don't know exactly where I'm going, so I was looking for a house to rent. The best rent I saw for what I need was $1,650. Okay? Yeah, ridiculous. So I'll be buying a home somewhere paying a lot less than that for my own future home, okay? So the services that we offer, of course, we have credit restoration. So what happens is we dispute all negative items with all 3 bureaus at the same time. With us doing it that way, our customers do see results within the first 45 to 90 days, okay? But we don't just do credit repair. There's a package deal. So you're going to have a credit attorney the entire time that you're in a program. If you have anything that is difficult to remove or the harassing debt collectors, that's illegal. So you can actually get their information after you tell them to stop. If they do it again, you give their information to our attorney. They will pursue them and you will be awarded compensation if the case is won. You're going to be able to establish a will and trust. I'm going to be a little nosy. Who in here has your will and trust already ready? Okay, good. I didn't either. I'm 38 years old. I've been doing this for a few years, so will and trust was the last thing on my mind, but we all know death has no age. And we also know that, I'm sure we've all seen how family members can fight and fuss over unfinished business while we pass away. So that is included as well. That is a few $1,000s elsewhere, but you're able to enter your information. It's going to be typed up, put in a nice leather binder by the attorney, and then mailed to you. Get it notarized, and you're good to go. Okay? Budgeting. I realized that one of the reasons why my credit was so bad was because I didn't budget my money. I just didn't. So I used this tool, started tracking my money, how I was spending my money, and I realized it doesn't make any sense, but I was going to the grocery store a lot. And I also was buying dinner out a lot. So, I mean, it really made no sense at all. Starbucks, I used to be a Starbucks junkie. I was able to see all of that. So now I have better management over my money since I could see where it was going. We have a debt pay down tool. I actually used this to pay off my last car 6 months sooner than I was supposed to. So you put in whatever monthly bills or whatever debt that you have that you're paying on, and it strategically calculates a way for you to save a lot of money on the interest, and you'll get it paid off sooner. Credit monitoring is with Smart Credit. With Smart Credit, you'll have access to your real credit score. I say real credit score because Credit Karma, they're good for seeing whatever is on your credit report. Yeah, that's accurate, but your credit score is not accurate on there. So you will have your accurate credit score and also all of the other bells and whistles that you would have on Credit Karma. Identity monitoring. If your credit is bad right now, you're safe. But once your credit score starts to increase, you will be targeted for identity theft. You know, that's just what happens. Identity theft is the second place cyber crime in the U.S. So you're insured here with $1 million with InfoArmor, and it also covers pre-existing situations if you're already going to do something with identity theft. Financial lockbox. Now this one is funny now. One of my clients, well, first of all, financial lockbox is somewhere you put all your personal information, okay? Social security card, passport, ID, everything you're able to put in this financial lockbox, set up a code, give it to one person, and you're good to go. So I had a client who went on a trip. She went on a cruise. She lost her passport to get back on the cruise. And of course, they wouldn't have let her on. But she had her financial lockbox. She was able to pull it up, show her passport, so she was able to get on that cruise. So now I bet you she ain't left that no more. Your net worth. We know all of the celebrities' net worth. Beyonce, Jay-Z, how much are they worth? When I first saw that we had this, I was like, I'm not doing that. I don't want to embarrass myself. I just plugged in everything and I found out actually I'm worth a few nickels. So you can see what you are worth as well. Savings goal, rather than saving for education, a trip, or just saving in general, you can put your goal in and the date, and it will help you show you a way to meet your goal. Credit builder. We have a secured credit card. If your credit is not so well, you may not get approved for a regular credit card. So you're able to put your deposit down to $500. You're going to use that as your credit limit. Utilize it responsibly. Don't go over 10%. Keep it for a year. And then, after that, then you should be able to get a regular credit card. And we just added Rocket Lawyer. You'll have access to legal services and information, and all kinds of different documents that they provide as well. And another thing I'd like to share, your credit score is calculated 5 different ways. And this, with our services, you're gonna have access to the credit score calculation chart, because if you know how your credit score is calculated, then you have better control over it. So the biggest portion is 35%, and that is paying your bills on time. My mom used to tell me, if you wanna have good credit, just pay your bills on time. She didn't know any better, but she was at least 35% right, okay? And then 30% is your credit utilization, or how long you've had your credit account. So you don't want to go over 10% on your credit cards, and then 15% is the length of credit. So if you have those credit cards, income tax time is coming up, you want to pay that credit card off, close it out because you're sick of maxing out your credit card, don't do it. Your credit score will drop. Long credit is good credit, okay? Just pay those credit cards down and then utilize the 10% or lower rule, and you will be good to go. But whatever you do, don't close out your credit cards. My mom also used to make me throw away the little pre-approval envelopes I get in the mail for credit cards, because credit cards are so horrible. So she thought they're not. Credit cards are golden, And if a creditor sees that you are making your credit card payments on time, I mean, that is beauty to their eyes, okay? So 2, 3, maybe even 4 credit cards, seriously. If you can do that and utilize them responsibly, you are in very good shape. So yeah, my printer was acting up at home and I didn't get to put my stamp on the letter, on the paper y'all have, but my phone number is, if you wanna write it down, it's 704-923-7267. And I will be glad to assist you guys if you need any assistance with credit repair. And I know you will probably go draw for the voucher, but what I'm gonna do is anybody who is here, I'm gonna waive $50 of the enrollment fee if you want to sign up.
And tell them how much that is.
Okay, so to enroll, the enrollment fee is $99, but for y'all, it's $49, and also $89 for your first month. So for the first 3 months, it'll be $89 for everything. After the third month, month 4, it goes down to $69. Now, we have clients that have been in the program since they started years ago because they're taking advantage of the other services. It's very, very cheap. So we recognize that, and after the 12th month, it goes down to $49 a month. So that will be $49 plus $89 to go ahead and get enrolled. And then the next 2 months you'll be charged $89, and then $69, and then $49 to be a long-term customer. And that is it. Thank you guys.
The one thing I wanted to add, and this is a Terrenceism, the one thing I would add to what Joy was saying about demonstrating financial responsibility, right? Yes, credit cards are golden, right? We know how to use them. The biggest thing is that the key part is how to use a credit card. The range of, and she touched on it, the part of, you hear 30% utilization, y'all gotta be at 30%. Well, 30% is average credit, right? So if you're looking for a 600, 620, possibly 640 credit score, keep your utilization to your credit cards at 30%. So what does that mean? My limit is 1,000. I make sure that I pay my balance down to $300 every month, and I'm good, right? Well, we want to be not average, we want to be great. So how do we get to great? Well, great is 1%. So think about credit cards again. If I'm at $1,000 limit, right? Well, 1% is $10. So I want to make sure that I carry a balance on a monthly basis at $10, right? So those are the things that you got to understand how credit works. Not all the times at my dinner table when I was home, we talked about credit. It wasn't something that was talked about, right? Savings wasn't nothing that you talked about. Having a will was not something you talked about, right? But these are things that we want to make sure that we change the barriers, right? You're not asking nobody for our 40 acres and a mule anymore. We got to start educating ourselves and start opening the book to what makes sense and how does that happen, right? So the other part of credit too, and again, I'm not the credit specialist, but the thing is just understanding and knowing it, right? Is that it's the type of cards that you have, right? So I don't want you guys going out and getting 4 secured credit cards. You don't need 4 secured credit cards because it's the type of credit, right? So you got companies like Credit One Bank, right? They are for problem or to building credit. You don't need 4 of those cards. Capital One, depending on which card you have with Capital One, you can get a couple of those. I'm talking you the cards that I have, right? But then once you build yourself up, you look at the Discovers, you look at the Cities, you look at the Chases, you look at the American Express. American Express is nothing but a charge plate card. It works for me because what do? I charge and I just pay it off. That's what American Express is for. It's not to carry balances. So also understand and begin to learn and begin to dial it back and say, okay, what type of credit do I need? Do I need to be building credit? Am I in the middle right now and I need to just improve my credit? Or do I need to go to the next level with credit? So credit is very important. It's a conversation that we should all be talking and understanding. When this young baby, when she gets to 10, her parents should already be taking her Social Security card and placing it, making her an authorized user on their credit card, right? So that by the time she's 18, she has 8 years of credit. And we're responsible enough that, well, I ain't gonna mess my credit up. I ain't gonna mess the baby credit up. So we're gonna continue to build things that way. So that's how credit works. That's how, they say cash is king, well, credit is queen. And we all play chess. So credit is queen. So those are the things that you just wanna, I thank you for letting me piggyback, but those are the things that you wanna think about from a credit standpoint. I think the programs you're talking about, it's worth it, right? Think about the investment. You're investing in yourself. And it's not just, once you pass the credit piece, that's no brainer, right? Then I'm thinking about getting my will done. Now I'm thinking about credit protection, all those things. So those are things that you just want to, again, think about, but just make sure that you're able to plan and budget accordingly for it. So I just wanted to add that too.
Thank you so much. Thank you. Thank you, Joy. We appreciate it. We're going to give a door prize. Miss Gina, what you got for us over there?
This is from, I forgot the name of the company, Roger.
This is Roger. Roger is...
Hello everybody, my name is Roger McLean and I'm the Independent Community Development Specialist of UAPRadio. Here where we not only offer DJ services, but we also offer photography, videography, graphic design, and podcasting for the news of Kings Mountain, North Carolina and surrounding counties. So if you like the content you've seen and would like to continue supporting our efforts in strengthening the unity in the Black community, contact me today at 704-418-1876 to book one of our services or to be on our SundayBS show where we interview, spotlight, and bring you all things new regarding the Black community news.
Hello, Cleveland County. My name is Scott Brooks, owner of Off the Grid Grooming Services. Haircuts are $15, $5 for the face, $10 for kids. Give me a call 704-923-9586. Thank you.
Hello, I'm Shanice Brooks of Melanated Labs. There's three things that we stand by: quality ingredients, quality products, and a thorough research formula. You can reach us at 704-750-9075. We look forward to providing quality products to you, and we look forward to you reaching out to us on Instagram at Melanated Labs and on Facebook at Melanated Labs. Thank you for your support thus far.
Anastasia Good.
Awesome. And Melanated Labs is Melanated Labs is Black owned. It's the product I use. So I use the shampoo, I use the conditioner, and it's local. The father is Scott Brooks at Off the Grid. He's a barber, but his daughter is a chemist. And she actually designed and created in her own house this product. And the pear pudding is absolutely wonderful. So you guys should definitely, I think it's Melanated Labs. I'm not for sure what the hashtags are.
Melanated Labs Research and Development.
Research and Development. Mm-hmm. So if you have natural hair, you want to do natural hair, that is a great product and it's local. And if they will deliver to you, or you can pick it up at the barbershop. Okay, so that's one thing that we try to do is we try to support local small businesses, and I try to bring in as many Black business owners as possible when I try to have these types of seminars. Okay. All right. Well, I am last but not least because I want to have a question and answer time for everybody. But as a real estate broker, I just want to talk about some of the trends that is going on in 2022 because, like I said, I've been in real estate since 1995. I've never seen anything like this. It's been multiple bids, so I just want to share some things so when you get ready to go on this journey, don't be surprised, okay? And I just want to share some things with you, but the market is like what we've never seen. It's a seller's market, and what that means is that person who owns the house, who's selling the house, is the one who controls everything, okay? So as a result of that, a lot of the sellers have decided to sell their homes to investors, okay? So we got these big hedge funds that are coming in, and they are very aggressive on buying a house, and they're knocking out our first-time home buyers. But don't give up. It will be frustrated. I've got 4 people right now that I was working with last year, got frustrated, and they just gave up for about 2 or 3 months. Now they're back on it, and that's okay. We will work with you. But because when we put a bid in, they put a bid in, and they put a bid in 14 days cash. You can't compete, right? So I'm telling everybody, get ready. FHA loans, and you can talk about this too. FHA loans now are going down. people are not using FHA loans as they used to, okay? So you're gonna have to qualify for conventional. That's really your best way of purchasing a house right now is conventional. Now with conventional, the rates are gonna be just a little tad higher, but in the credit report is a little higher too. I think now what FHA is like 580 is the minimum.
Yeah, 580 is the minimum credit score,
Yeah.
and we'll definitely touch base on that. But yeah, 580 is the minimum credit score for conventional. So you have 5 loan products, right? So we give you all 5, right?
Yeah.
So first one is conventional. That's what we just talked about, conventional. Conventional is a conventional way of doing things. If you go back to the old schools, they'll say, yeah, I need 20% to put down on a house. That's where they get conventional from, right? But conventional's changed, they've upgraded, because guess what? I ain't got 20% to put down, but I do qualify to buy a house. So with a conventional loan, if you're a first-time home buyer, the minimum down is 3%. Okay, 3%. But you have to have a minimum credit score of a 620. Now, what I want to tell you about conventional is that everything's just not predicated on a credit score, right? I also want to see where you work, how long you've been working there, how much money you make, right? Are you hourly or are you salary? Do you go to work every day, right? Because what changed? COVID came and changed, right? It knocked some people's hours down. Some people say, you know what, I ain't going back to work. I'm gonna get this stimulus money right here, right? And I'm just gonna sit back and chill. All those things help change the algorithms on how an underwriter looks at getting a loan approved. My job as a mortgage lender is to do what? Get us approved. Because guess what? If we don't close, you don't get a house, and I can't eat. That's just how it is. So no one gets paid to say no. So that's what conventional is. FHA, as Ms. Denise said, minimum credit score is a 580. However, for me, again, because I'm going from good to great, right? For me, I want you to have a 600. Because with a 580, what does that mean? That means that we had some hiccups in the past, we had some slow or late pays, but then guess what happens if we don't, if life happens to us again, then you're gonna have late pays on your mortgage. Or maybe you can lose your mortgage. So let's get that 580 up to at least a 600. And then let's talk about how we get done. But with FHA, minimum down is 3.5%. The next loan you have is USDA. You guys are privileged to live in Kings Mountain. So guess what? There's a lot of area, this area here is USDA eligible, right?
And that's 100%.
And it's 100% financing.
No down payment.
Correct. Also though, we want to look at what is our debt to income ratio. That's huge for USDA. Minimum credit score, 620. Right? Go to the next one. I have any veterans here? Anybody serve in the U.S. Army or Navy? You did? Thank you, sir. Thank you. Appreciate your service, seriously. Appreciate your service. But you can qualify if you have your VA benefits. You have a VA loan. VA is also 100% financing, right? VA, only person that can go into VA with a vet to get the benefits is his spouse or her spouse. So it can't be, he take his daughter and let's get a loan together, right? It don't work that way. He can do it, but he can't have anybody else on there unless it's his spouse, right? Or her spouse. And then last but not least, you have jumbo loans. And the reason I'm saying jumbo loans, why? Because everybody one day, whether you want to or not, or you just want to be able to do it, you can buy a house that's more than $647,000. So 647 gets us what? A jumbo loan. And guess what's coming to Kings Mountain soon? Jumbo loans. Because guess what? You got the land. People are coming. They want to stretch themselves out. Charlotte is. Charlotte is. I'm looking like this in Charlotte, right? I want to spread out. So that's what happens from a loan program standpoint. So you got 5 loan programs: conventional, FHA, USDA, VA, and then you have jumbo loans. The thing that I will say, and I'm not disagreeing with you, but one thing that we have to change the mindset of everybody. For FHAs, there's nothing wrong with an FHA loan. Hear that, camera? There's nothing wrong with an FHA loan. The problem is because you have these sellers, right? And you have the sellers that saying, okay, I want to sell my house for as much as I can get it, and I want to be done with it. So what FHA says is that, and this is to check the ball, it says that, hey, you're going to get an appraisal done on a house, right? That appraisal is an independent third party. It's not the guy. It's not my best friend. It's not her best friend, right? It's somebody who has nothing to do with the transaction that you're going to hire to say, hey, I'm interested in that house. I want you to get an appraisal done so you can tell me whether or not the value is worth what the seller is trying to sell me for, right? That's fair. Right? Fair. So then you fast forward and you got these prices are going all over the place, and you've heard the horror stories of people saying that they're going to overbid, for the asking price, or they're going to put down $50,000 in due diligence just so that the person can win their offer and all of this stuff, because the market's just been sometimes you don't go to fisticuffs, right? I mean, this is Friday night, but you're like, stop playing with me. This is my hard-earned money. So with the appraisal, with the FHA loan, and hence why some of the sellers don't want to accept them, is because the FHA has an addendum. They have an addendum that goes with that appraisal, right? Nobody wants to talk about it, but the law says, because they signed it, says, hey, if that appraisal and the addendums here doesn't come in for what the purchase price is, then technically I can walk away, take my money back, and keep on moving because your house didn't sell or your house didn't appraise for what it needed to appraise for, right? Now, some of my agents, they've gotten smarter, and they said, okay, well, for you to compete, because I'm sorry, based off your credit, based off of your debt to income ratio, the best you can do is FHA. That doesn't mean you shouldn't buy a house. That means we have to be creative on how we do it. So how we've done it is that we have our sellers and we talk and negotiate. Because this is the age where everybody just want to text, right? Where everybody just want to type an email. No, let's have a conversation. Let's talk about big business. So I'm telling you that, hey, Mr. Seller, my client here, yes, they have an FHA loan, but they're working with a lender, and he knows or she knows what they're doing, and they told us that we're good, and we can actually close. The underwriter's already reviewed all their documents, so they're ready to rock and roll. So what I need you to do is, I'm going to write a piece of paper that's called an appraisal addendum, and I'm going to say, no matter what happens, or not no matter, but maybe I say, hey, that the house, whatever the house appraises for, my seller, me, or seller here, is willing to pay $5,000 over the appraised value, right? And they get a contingency or something that's built in there. But it all comes from having a conversation. And one of the things that I said earlier, because I went first, I like to go last, but when I went first earlier, that I said is that part of this whole equation, guys, no matter what we say tonight, you have to get with a team of folks that you trust. They have to understand your situation. You have to be forthcoming on what you have personally going on, right? I don't like surprises anymore. I used to like them. I'm 44, I don't want surprise. So let's not have no surprises of, oh, I forgot to tell you that I pay child support. Yeah, you forgot. Oh, I forgot to tell you that by the way, my hours that I told you on my job, I was working 42 hours a week. Well, now they cut me down to 32. Let's be forthcoming on, hey, this is my situation. Can you help me? And if you can't help me, can you point me in the direction of someone who can? That's just what it's about. If I can be your lender, great. I work with as many people as I can possibly can. But if I'm not, I can refer you out, right? Same way with Denise. If you can work with her, let's work. Let's rock and roll. Let's get things pushing forward. But if not, let's get to the situation, because the thing that I truly believe, as Joy said, rent $1,650. $1,650. That's not a lie. $1,800 one bedroom in Charlotte. One bedroom. And it's continued to climb. I'm blessed to be a landlord, right? I'm sitting back, I got a duplex, and I'm like, man, Terrence, you only charging $900 each side, but, you know, I'm paying my bills, but I like the people that live there. But at the same time, I'm like, oh, I can capitalize and I can help pay for I got two more of them just like him. I got two more of them, so I can do some things, but for me, it's relationships. So as long as my bills paid, I'm different, and that's whatever. But at the same time, but people are looking and saying, look, I can sell now. Right? Y'all seen this 10-year challenge thing going on, right? Yeah. Stop looking back. Let's stop looking back. Tell your friends stop doing that. No 10-year challenge. But the funny thing is, you can look at is, look at the 10-year challenge on the house, right? 10 years ago, you had a house that would have sold for $112,000 right here today in Kings Mountain. Now today, fast forward, that same house is selling for $375,000. And you look at it like, I don't want to buy that. That ain't what I thought $300,000 should look like. But that's because the price of money has gone up, but it's still deteriorating. You know what I'm saying? So the last thing I'll say, and again, I know we went to Q&A, what's happening with the yield curve right now, right? Economics 101, right? You have, prices of goods. The prices of goods is what? It's scarce. So now everything's going up, right? Toilet paper has increased. You got I went and got some Glad the other day, the spray, bathroom spray. That was up. I'm like, this used to be $2 or something, man. It's crazy. So everything that you look at is going up. Gas prices are going up, right? So what we have to start doing is, we have to start seeing, okay, how are things going to elevate and go back down? If you haven't heard it yet, and this is the first time you've heard it, ladies and gentlemen, we are in a recession right now. Right now. It's not happening in June. It didn't happen 2 months ago. No, we've been in a recession. It's just the way things were going. As I told you before, the government was pumping money out here so that people can continue to do what? They will continue to spend. Right? If you look at you go to the malls and all that kind of stuff, everybody buying everything, right? Certain things you shouldn't be able to buy. Everything's going, right? It doesn't make sense. Like you go to a sneaker app, try to buy some Nike shoes, you can't even get your shoes because they got the computer snap all the shoes up and then they're gonna sell it on another website and sell it to you for what? For more money. So it's crazy what's happening, but what I would say is, and I say this to say, the yield curve is done this. So what they're doing is interest rates are starting to creep up so that they can try to flatten the yield curve, right? So again, at the end of this year right now, give you a plain example, and this may not mean much, but just think about what I'm saying conceptually. A lady came to me 60 days ago. So this is right towards the end of the year, but 60 days ago, right before Thanksgiving, I priced her out, gave her a pre-approval, conditional approval at 2.99%. She had a 660 credit score. She was FHA, right? And she's telling me she's going to buy a house. Great. I'm going to pre-approve you, but your interest rate is at 2.99%, right? I'm telling her interest rate is par, meaning that she does not have to pay discount points. We'll come back tomorrow. We'll talk about discount points. If I come tomorrow, I'll come back and we'll talk about it. She didn't have to pay discount points. What is discount points? That's extra money that you pay for a certain interest rate because that rate's necessarily not available to the masses, right? So fast forward, she came and she said, Terrence, I got my full approval. Or not, she got her full approval, but I got my house under contract. I'm under contract, and she waving it at me. I'm like, great. And she's like, so my rate's still 2.99? I said, yeah, but guess what? If you want that rate at 2.99 60 days later, today, and we locked her in for 60 days because she's going to close sometime in March, but for today, she had to pay $6,000 in addition to her closing costs. So her closing costs went from $12,000 to now she's up to about $19,600 or whatever, but that's because on top of it, she got $6,100 that she had to pay in discount points, right? Because, again, hear me out. The cost of 2.99 60 days ago was zero. The cost today is $6,100. What does that tell you? That means interest rates have done this, right? So when I sit back and I say, okay, if you don't want to pay the $6,100, what rate can I give you so we can still be at par? And that rate would be from 2.99 60 days ago, today that rate would have been 3.75%. What's the difference in payment based on the house that she was buying? She was buying like a $265,000 house. The difference in payment was $128 a month. But when we do the math, right, because that's my job, $128 a month, divide that by, you keep calling myself on the floor. No, but $128 divided by $6,100, it came out to about 4 years. It takes about 4 years to recover our money. So again, when we're ready to sit down and have a she likes me. When you're ready to sit down and have a real conversation, those are the conversations you want to have with your lender. It's not just about, well, what's my credit and this is what I have. That's part of it. Remember, we got 3 pillars: credit, income, assets. That's just how the game goes. And so my job, before I leave this earth, been doing this a while, but my job is not just to continue to make money. That's fine. We're going to be fine with that. My part is to educate. The part is to continue to push forward. Because as I'm giving it to you, you guys are going to give it to somebody else. And then they're going to give it to somebody else. And then we're going to be where we need to be. Does that make sense?
Yeah.
That's where we're going with it.
Thank you for sharing.
Sorry, that wasn't all that.
I just want to hit on just a couple of things, and then we're going to have another prize to give away, and then we're going to have a Q&A. But inside your folders, I gave you this thing called Working with Real Estate Agents. And it's very important because when you work with a real estate agent, you need to know how that agent is going to represent you. There's 3 different ways. The agent can represent you as a buyer agent, dual agent, and as a seller agent. And this is very important. So as a buyer agent, that's what I am, as a buyer agent. So that means that I exclusively work for you. I represent you. I look out for the best interests of you. Dual agent means that I'm working for the company and I'm working for the seller, the person who's selling the house. So that's dual agency. And then seller agency is the person who's sitting on site for the builder. Okay, like right now we've got about probably about 8 communities getting ready to pop up in Kings Mountain. We already had one, LGI. So if anybody went to LGI, you've seen people working in there. That's a seller agent. That means they work for the builder. They're not looking out for your best interest. They represent the builder. Okay, so be careful what you say when you go in there, and you need to make sure that you have your agent with you. Okay, so those are the 3 types of agency. So I wanted to go over that real quick with you, and also put a flyer in here about the 6 benefits of home ownership. One of the reasons for home ownership is, of course, appreciation. Equity, building equity, as he stated. Kings Mountain right now is on a rise as far as equity because people from Charlotte, like he said, are moving to Gastonia. Gastonia people are moving down here to Charlotte. We got the casino, we got a lot of new companies coming, and so this area is like untouched. The only two buildings we have right now is LGI Homes, and then Pop Homes is another local building, okay? And then of course roots, people who own rather than rent, stay in their home 4 times longer. Education, and that's why, you know, Terrence is here, I'm here, and Joy is here, because it's about education now. Research shows children of homeowners can earn higher test scores and graduate at a higher percentage than those of renters. And that is so true, because right now, like he said, there's a lot of landlords discovering they can make $100,000. Well, what they're gonna do, they're gonna sell it. They're gonna give you a 30-day notice, even though you really have a 60-day notice. They're gonna give you a 30-day notice, because if you don't know, and if you don't call an agent to help you, then you're gonna be trying to get out in 30 days. But where are you going? Because if you were paying $650 in Kings Mountain, ain't nothing here $650 no more. Ain't nothing here $850. I think it's what, $1,000? That's the minimum right now, which is going up because there's a community, it's 8 new communities coming to Kings Mountain. They're expecting 44,000 people, new people in Kings Mountain in the next 3 years. Where are they going? 44,000 people. So if rent right now is $1,000, how much you think it's gonna go up, right? So that's why we're here to educate and say, let's get on this journey together, let's work together. Happiness is a feeling of owning your own home is unmatched. You can fix it up, you can make it your own, you get a dog, plant a tree if you want. Tax savings, and the government been trying to get rid of this tax savings, but it's here, it's gonna stay here. That's the benefit, is that at the end of the year, you can write that off, you can write off your closing statement, you can write off your anything that you put into the house, your taxes, your home insurance. You can build up equity, as we stated, to help a child go to school or to buy off stuff or even to help retire. And the last thing was appreciation. Home values have a well-documented history of going up over time, which we already seeing is already happening. And I get calls every day, at least a call every day of somebody that the landlord has decided that they're moving and they're trying to find a place to go. So I don't want it to be you guys. That's why we have this seminar today. It's for you guys to sign up and be a part of our team so that we can help you with this journey, okay? The other thing that I wanted just to mention right quick, because we've already talked about conventional FHA and down payment and new home construction is what I want to talk about. That's kind of my expertise. I've did new home construction since 1995. And what I'm seeing right now is it's a big game with new home construction because lumber is up, as you probably know in the new article, 20% now. I think now they're adding $20,000 now to the houses that are existing now just because lumber went up. So if you've seen LGI Pop Homes and houses, $250, now it's $270. And it's taking them a longer time to build because they're running out of windows, doors, you know, just contractors. So now instead of, what, 120 days to build a house, now it's
6 months.
6 months to a year, depends on, you know, a townhome maybe 6 months, but a single family home, it could be a year. And people do ask this question, I'm gonna go ahead and put it out there and we're gonna have Q&A. They ask, is it better to buy or is it better to build? So, what do you guys think? What do you think? Is it better to buy or is it better to build? If you have land, is it better to build on your land?
Building on your land.
Build on your land? Anybody else? You said build on the land?
I think building on your land.
Build on your land? What do you think, Karen?
I think personal preference. That's an option. It's one or the other. Can I take that?
Yeah, you can do
one or the other. One or the other. I would say existing. I would say existing. That's why.
And I would say existing too because the time that it takes and the money it takes, it could be your land, but now you got to get the land surveyed. You got to pull permits, and Kings Mountain is slow. When it comes to pulling permits, you're going to fight the city hall to get the permits done. You got to get a survey, and right now the surveys in Kings Mountain, I just talked to one great survey, they're 15 months behind.
Wow.
That's your land and that's your property, but they're 15 months behind. Now if you can wait on that and live somewhere else, perfect. But 15 months where you can get your land surveyed. And then you gotta see if it perks. That's a good 12 months before someone can come out and do that. Because Kings Mountain, we're growing, but our infrastructure is not growing. So we don't have the manpower to come out and do those things. Now it's coming, it is, and that's why I say it's better to buy, or it's better to, and I'm learning a lot since I've been down here in Kings Mountain, I'm in Charlotte. Modular homes, that is like, if you got land, put you a modular home. I mean, that's, and make sure that's your land. Buy your own land. Do not buy the land from the modular companies, because when you get behind, they will come and get their modular home and they will take your land. Okay? Right? Yeah. So have your own land. But modular homes is really big here. Trailers are big here. And so I'm learning a lot and how to register. So if that's something that you're interested in doing, you have your own land, I can assist you with doing that too, because I've learned a lot in the last 2 years, because that market is really huge. But existing homes would be the preference. We don't have a lot of new home construction here yet, but we do have some. But like I said, it's about 8 communities that have already pulled permits, and they're already getting ready for construction. And they're starting at, I think LGI ended up at 263 when they finished up. Pop Homes is about 250 or so here, but there's going to be starting at 300. All the new home construction that's coming here. Pop Homes is a local builder here in Kings Mountain. They're building, I can tell you what, one of their product is off of, what is that street? It's like you're going toward Northwood. Instead of going to your right, you go to the left.
Grace Street?
Grace Street.
So Pop Homes, Pop stands for Prince of Peace. But what the builder is, and they've been around for about 30, 40 years. I haven't known that long because I'm still a baby. But I've worked with them for the last 7 years. But they build a very, I would say a very good home, very competitive to the LGIs, the True Homes. If you need tray ceilings and things of that sort, Pop ain't for you. But if you're looking for a home that's good, you know, all stainless steel appliances, wall-to-wall carpet except for the wet areas they put down, not hardwoods, but what do you call it? Laminate, re-engineered, something like that. You get all appliances except for your refrigerator, but the price is right, if you ask me. They've been building in Kings Mountain. They have some homes, a home site going up in Grover, North Carolina.
In Cramerton.
And they got some stuff in Gastonia and all this stuff. But then they branched out, so now they're all the way up in Raleigh right now. So they're kind of doing this whole little southeast thing between, you know, as far as south as Grover, but then going up to as far as Raleigh. So they've been in Charlotte, and I'll give you the same house that's in Kings Mountain. It's $230,000. That same house, same build, same everything in Charlotte is 292, 302, depending on the area and all that stuff. So you got that much of a range difference of like $70,000. So, but they build a pretty good home, and I'll give you their website if you guys want to write it down. It's My Pop Homes. So MyPopHomes.com. When you go to the website, you look at what's for sale. If it says that it's reserved, don't be upset. There's more coming, but you'll see things that's saying developing and all that kind of stuff. But if you have any questions, definitely reach out to Denise, because Denise knows the builder, and you can get your questions answered that way.
And they are going really fast, Pop Homes, because they're very low inventory, and that's another reason why the prices are going up. There's sellers out there, but it's not enough sellers, not enough people who are selling their property. But we're seeing those numbers increase as we speak. Yeah. All right. Well, that's pretty much what I wanted to share. And so we have Gina. We have one more prize to give away.
Miss Tammy.
Yay!
Oh, I want that right there. That's good right there.
Thank her. I want to thank her for being the help for taking care of us.
Okay, well, before we close, we want to do a Q&A. We want to take about, we got about 5 minutes for questions and answers for either myself, the real estate, because Joy is the expert when it comes to credit. So if you need to start there, you need to start with credit. And if you got your credit, you 620, 640 and up, then you can move on here to Terrence. Once Terrence gets you approved, get you ready to go, you bring that pre-approval to me, that's when I start helping. far as showing you houses and negotiating on your behalf so you can get the best deal. Okay? So anybody have any questions right now? We got about 5 minutes, so don't be shy. This is the time while you got people in front of you to answer those questions. Ask those questions that you have.
I have a question.
Go ahead.
How would it work with someone that has student loan debt?
Yeah, so how does student loan debt work, right? So the rules have changed. I mean, so depending on the loan program, and when you talk about student loan debt, so it's nothing that we run away from. If your student loans are currently deferred, right? Well, right now they're getting zero because due to the forbearance. We're going to take a calculation. So it's a calculation that we do depending on that loan, depending on that. I'm sorry, fellas. We had a question about student loans. So what the student loan piece is, depending on the loan program and based off of your payment and things of that sort, then we apply that payment as such. But don't let that deter, right? And I said to anybody, if you have student loan debt, you don't want that to deter you because before, yes, it was a little bit harder, but they've eased those guidelines up. They've eased things up. There's something that's called an income-driven repayment plan. You can take that income-driven repayment plan and apply it to any loan program based off of your income-driven repayment. So, I mean, student loans is just, I mean, it is what it is. I saw Navient the other day said that they got to come and give up some money and knock off some people's debt because of, basically because they've been taking advantage of folks recently. So if it applies to you, great. But if it doesn't, that's fine too. Let's just, work with it and keep going.
Would that still apply if they've been bought out to another company?
Yeah. So if your student loan has been bought up by what's my Navient part, they're going to be investigated. That's going to be a question that you ask your servicer. Okay. So you go back to the servicer, you start looking at, okay, how much do I owe? How long have I owed it? How many different interest rates have y'all given me on this and things of that sort? So once kind of some of the dust settle, I would say definitely call your servicer and have that conversation with them before the student loan is due. Do it before it's due. So have that conversation from that standpoint. Thank you.
And still, just like Terrence said, make sure you go ahead and still do your loan application. That's what he's here for. He's the expert. So don't lean on your own understanding. You know what I'm saying? Don't try to figure things out. You have a team here that can help you with that. We've already covered a lot of stuff for, 20-some? I hate to even say how long, 20, 25, about to be 30 years. So, don't, just make that call. Make that call, go online, do that application, you know what I'm saying? Because you got to get through the credit. You got to get through Terrence, the mortgage loan person. You got to do your application to even get to me. And some people try to come straight to me. Well, I can't help you until you get back here. We got to get your credit, and then we got to get Terrence. He's got to do your loan application. I can't show you a house or do anything until you have that pre-approval letter. I need to know how much you qualify for. Because if I show you something, you know what I'm saying, $300,000, and then you come back with a pre-approval letter of $200, that's going to be really a hard situation to have to rectify. Okay, so I'd rather just you go through credit, mortgage, and I'm the real estate person. It doesn't mean you can't call me and ask me. I will answer any questions that you have, but I'm not the expert on mortgages. Terrence is. I'm not the expert on credit. Joy is. Now, do I know credit and do I know mortgages? Yeah. I try to stay in my lane. My lane is real estate. Okay, new homes. I keep up with the marketing trends. I keep up with different bathrooms. What's the newest kitchen design? Is a gourmet kitchen? What's going to be in it? That type of thing. I know when new subdivisions are coming, I can get you in as a pre-sale, which means that you can get in and not have to pay as much. Because if you get in a community in the beginning, you can get in as a pre-sale. Pre-sales mean they're starting at $300. But if you don't get in a pre-sales and they sell about 10 houses, it's going to be $350. And so if you can get in the beginning of a community, guess what? You already got $50,000 worth of equity.
Correct.
Right? So this is a great time in Kings Mountain to buy. Like, they are breaking ground as we speak. 8 of them. So let's go ahead and get that credit together. Don't wait. Let's go and get that mortgage. Go ahead and apply for that mortgage so that you be ready to be one of the first ones when it comes to purchasing a new home construction. Okay? Or existing. Because existence is like that. I like new home construction better, I'm going to tell you. That's just my expertise. Because existing, we got to get in there and negotiate. We got we gotta work some things to get you in that existing home. And then everybody don't like houses that somebody's lived in, because then you got their problems that they're leaving behind. You gotta figure it out. You gotta get an inspector. You gotta know what those problems are. And right now, sellers are not fixing. Have you found a seller yet that's fixing anything? Repair? They ain't repairing nothing.
I got a call today. There's a lady buying a house out in, real estate agent called me. They buying a house out in Fayetteville. And they said the appraisal just got done, but they was asking me about the home inspection. And they said, they was asking about the appraisal, but the home inspector said, hey, you need to fix something on something about the slab, or something to the house. And the seller said, no, I ain't fixing it. And they wait for the appraiser to call the appraiser to tell them they gotta fix it. Because there's a difference between what the appraisal says they have to fix it, because the appraiser says it gotta be fixed and it gotta be fixed, and you're not getting funding for it. And I said, my response to her was, because I'm very direct, guys. I'm just, life, we only got one way to be. We got this amount of time to drop by a house. We gotta be fast. But with all that being said, I told her, you call the appraiser? Well, ain't nothing I can do, but call the appraiser. I mean, because if the seller say they ain't gonna do something, well, okay, but that's why you want to work, and I'm not trying to tell you to work with Denise, but I'm telling you, you got to work with somebody who knows, because that should have been a conversation that y'all had before y'all even put an offer in. Hey, we're going to get a home inspection done, right? There's going to be some things that's going to come back on the home inspection just because it is what it is. A house, whether you got a new house or existing home, it's all going to have something on the report. The question you say is, before we put our offer in, when they come back with that, are you in good faith going to negotiate? Are you going to be willing to listen? That's a yes or no answer. They say no, we may not want to put an offer in that house, because I know that if you don't do something, I'm going to have to knock you the hell out. So that's the things that we're going to keep going and just be real about it. It's really that simple. But that's a good point.
It is. Okay, any other question?
Terrence?
Yes.
I got approved for 2 loans.
Okay.
Okay, so I'm trying to, both is at the same level. And so far, everything we looked at is not even close to what we need.
Right.
So, can I apply for another loan, or should I just try to build my credit even higher?
If you don't mind sending from the group, I would say, what's the purchase price? What's the amount they put on there?
They gave me 200.
200, and for what you've been looking at, you see 200 ain't working. Right. So yeah, so I'll say it's not working. Gotcha. And mom ain't happy, nobody happy. So what I would say is, let's have a conversation on Tuesday. Y'all reach out to me, give me a call, shoot me an email, call me, whatever. 215 numbers on there. That's my personal cell right here. The 980 number is my work number, but call me. What's your name?
Brian.
Angela. I remember Brian and Angela. We met Friday night. But y'all give me a call, and then we can kind of talk, a little bit more in depth before we just jump into an application. Just make sure that if it's something out there that I can help you with, just uncovering some opportunities, we can go from there.
A question
Yes.
on that, and that might be for her. Bankruptcy. Will that limit you from doing anything to being on the loan?
When was the bankruptcy discharged, and what type of bankruptcy
It's not
was it?
discharged.
Okay, it's
I've got
not.
a couple more years on it.
So you got, and what type of bankruptcy was it?
13.
13. Yeah. So you have a couple more years on it. How long have you been in bankruptcy? Have you been making payments back?
I've been making payments, but I did get the extension for the COVID.
The COVID and all that good stuff?
Yeah.
So
that's what pushed me
that's what pushed you further back. Yeah. Well, we can talk a little more in depth on that, but typically what happens is, if you've been at least making, you've made at least 12 payments, so you've been a year payout, then if you can also get approval from the court to buy a house, then typically you can go on to a loan application and things of that sort.
Because, I think, when we're not being able to be on there to help the income, I think that's
what's helping limit and all that good stuff. Yeah, but let's talk about our situation, because we might look at some things and say, okay, like maybe on Brian's credit, if there's a car on there, right? You got a car note in there? Right, so maybe there's a car on there, and maybe we could say, you know what, how about you go get his car, refinance it and put it in your name, and let's balance the checkbook within our own household. So maybe you carry the cars, and he carry the house. Eliminate that debt possibly can help boost up his approval and things of that sort. So there's different ways to also do it that way as well. And that's the other thing, guys. I'm telling you things that I learned, right? I didn't just wake up and all of a sudden that happened. But if I'm single, well, we just ride or die, right? We got to take care of ourselves. But if you got a spouse, But think about balancing, if you can buy a house together, great. But also, let's think about life, right? Let's plan. If things ever went south, well, do we want both of us on this house that we gotta sell or get rid of? Or we gotta go to a foreclosure or, God forbid, or short sale? Well, maybe we should balance the checkbook within our household. So maybe the husband carries the cars and the wife carries the mortgage, if the income supports it, right? Or maybe vice versa, but there's more than one way to skin a cat, as we know, but those are things that we want to be creative and think about from that standpoint. Because that could be it.
Tuesday what time?
Whenever you get ready. Yeah, just call me.
Oh, Terrence available.
Yeah, call me. Yeah, call me. I start as early as 8 o'clock.
Okay.
Yeah. Anybody have one more? We got time for probably one more question.
We'll take two. I saw her hand.
Go ahead. Oh, yeah. Go ahead.
I have a question from the live.
Oh, from the live. Wow, what's up, live?
It's asking, is the information folder available for mailing to people who weren't here and attended?
Oh, yes. Yes, most definitely.
Tell them to inbox Miss Denise and their information, and she'll get that to them.
Yes. I'd be happy to do
The
that.
second question was, I believe you answered it already, with the market right now, the seller's market right now, is it a good year to purchase?
It's always a good year to
Yes.
purchase. Absolutely. It's always a good time.
Because rent is going up, so yes.
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 It's always a good time to purchase.
Yeah.
To my nurse, did you have a question? Or you was just messing with your paper? I saw that. Okay.
But go ahead.
Since I came in late,
Yes.
who are you?
Oh, my name is Terrence. Terrence, last name is Guess. And I'm with Atlantic Bay Mortgage Group. Did everybody get on my card? No? Y'all got on my card?
Thank you.
You welcome, thank you. What was your other question? She got a couple of
I just need to know who everybody.
Who everybody was?
Yeah.
Joy, Terrence, and
I know
Denise. JDM. Well,
JDM in the house.
JDT.
JT. Yeah, go
We'll
ahead.
figure that out.
Okay, Jay.
Joy, Terrence, Denise.
Yeah. Joy's credit. She has a credit repair. And then you just met Terrence, Atlantic Bay Mortgage. Okay, and then of course I'm the real estate agent. Yeah. Okay. Gina has a question.
You answered it about building on your own land.
Okay.
Yeah. And there's something called a construction to perm loan. So that's how you build on your own land.
Oh, I do
So
that.
you get a construction to perm loan.
Okay, you said it would be best to put modular homes out on the land. Is there a process, and you said it would be like 15 months before they come out and expect for you to build? Is there a length of time for the modular home, or is it 120 days?
Modular homes, well, if you go through the company, which I think around here, let's see, what's the name of the biggest modular company? Clayton in Shelby, North Carolina. So you would go through their process. And so they have people that do those things for them. So they may be a little quicker because they've been in the area, and so they may have specific people that they work with that only work on their land and bringing their modular homes and things like that out. Yeah. Yeah. Okay. Any other questions before we wrap up? Because it's 7:17. We got to be out at 7:30. So I just wanted to thank everybody for coming out. Thank you, Joy, Terrence. Thank you guys for coming out. And on a Friday evening, when they say snow is coming, and I hope you guys learned something, you know. And please reach out to any one of us so that we can help you. Let's start this journey now. Let's make a difference now, okay? And let's share this information. That's why we're live. So the people who couldn't come, they're still blessed to have this information. So let's just pass it on, okay? All right, thank you guys for coming out. All right.
We took a picture in front of in a house that we were gonna give. They took
Yeah, that's all right. You in a good place. Everything happens for a reason. And we're gonna work together.